Let's do a quick update on JD because this thing is not looking as hot as it once was, but I'm still in my position. It seems that the whales are also still in those January calls. Structure is still holding and everything is good for now. So we're going to cover the actual setup, what I am planning to do, if I still think this breakout is happening, and what exactly has to happen in order for me to remove my bullish thesis and take my loss. My name is Peter DiCarlo. I've been a full-time trader for the past 11 years. Grown my account to over $5.5 million with only a 60% win rate, and all of my trades and investments are based off of technical analysis within my trading system. I don't care about what the company does, the fundamentals, the PE ratio, EPS, none of that. If my criteria is met when it comes to my indicators, I very simply take a position. If it works out, great. If it doesn't, not the end of the world. Now, JD is one of those stocks that we have been trading because all of our criteria has been met. One of the first things that put this on our radar was the insane amount of options activity that had come in over the past couple of months. If I go into my THT student portal, which all of our community members get access to, you can go into the unusual flow section, scroll down to the ticker symbol area and type in JD. You are going to see that there have been 4 major unusual options activity alerts that have hit, dating back as far as September 9th, with the most recent September 24th. You can see here as well, they are all for the same exact strike, $40, for the same exact date, 1/16/2026. Now, at the time, the price of JD was anywhere between $34 to as low as $33.20. Now, this is highly unusual and normally a sign that a stock is going to break out. Now, even though the stock really hasn't done much since those options came through, I want you to understand that in most cases, when these whales enter these positions, it's normally because they have some sort of insider information and they need to take the position further before any type of news, potential earnings, which is what we're going to talk about now. But basically before the actual move happens, so obviously they don't get caught with insider trading. If they were to put an order through like this one day before earnings and then earnings happens and the stock runs 30-40% or something like that, the chances of them actually getting caught and put in prison are significantly higher than just taking a position in September and then it pops on earnings in November. Now, one of the things that's very important to understand here is that they are still in this position. The way that we know this is simply by looking at the options chain. You'll see here, this is the call option, $40 strike price, expiration 1/16/2026, and the OI or open interest is 438,000. That means 438,000 contracts as of today, Thursday, November 6th, are still open and still being held. If that number dropped to, let's say, 100,000 or 50,000, then there would be a very high chance that they closed out their position and they're no longer holding it and they took the loss. Now, I want you to understand that just because these whales are still in a position does not mean that they're going to not lose money, right? Like I do really well normally following this type of options activity, but we still lose. For instance, they were holding Pinterest calls going into earnings yesterday, and that did not play out well at all. So institutions still lose, but this is just one piece of information that is making us bullish on this setup. Now, the second piece of information is that there is a short-term structure shift. Now, you'll be able to get access to all the indicators that we're going over today with the specific settings using our course library down in the description. All the indicators, all the courses, all the tutorials are free. In the Smart Money Mastery tutorial and course, we teach you about market structure. Now, bearish market structure happens when price is selling off, bounces to make a lower high, selling off again, bounces to make a lower high, and continues to do this. This is not the type of price action that we want to be trading. Hence, all of this that you see here from April 2025 down to September of 2025 is not bullish structure. Each and every single time price bounces, it sells off into a lower low. This is not what we want to trade. However, structure will continue to do this until eventually it shifts. And the way that it shifts is price will bounce, take out this previous high, normally pull back to make a higher low, and then do the exact opposite and enters bullish structure. For those of you who are technical analysis nerds, you'll also realize this is normally where inverted head and shoulders play out. Now, if we shift over here to the left, you are going to see that that's exactly what happened with JD. We swept and took out this previous high right here. Price is now pulling back into a higher low. And if you know how to draw your smart money zones using the course like we said down below, you'll see that our smart money zone is seated right between 32 to 31, which is normally going to be the lowest that they allow the stock to pull back to before they enter the breakout. And I think that there's a very good chance that price is going to bounce here. And this is a big reason why I'm still bullish. Market structure is now bullish on the short term. Institutions are still inside of those options positions. The point of control on the volume profile is also seated right here, which is a really good sign. And I do think that in the next couple of months, and I am planning and betting on the next couple of months, the price is going to break out about 25% by January. And if we take a look at how JD is setting up right here, that means that our target or our upside is 25%. Now, what would our downside be or our stop loss? Well, that would be a break of structure. So if $29 ends up breaking and we sweep a previous low, this means that bearish structure is back on the table and we will continue to sell off, which means that we will set a stop loss underneath this level. This gives us 7% downside from where we are right now, 25% upside from where we are right now, or a 3.62 risk versus reward, which is all you need, right? If you even have a 50-50 chance or a 50% win rate, and your risk versus reward is 3.62, meaning you're going to get paid 3.5 times when you win versus what you lose, you will make a killing long term. You can still lose today, you can still lose tomorrow, you can still have a string of losses. But long term, if you play this out over hundreds and hundreds of trades, you will make an absolute killing. So I'm still bullish on JD. I'm still holding on to my position. Let me know what you think down in the comments. I'd love to hear from you guys, whether you think I'm right, wrong, crazy, whatever it is. I'll see you guys tomorrow. If you want to get access to all of the indicators that we use in these videos, as well as learn how to implement them within the strategy, go ahead and check out the link to our trading library down below. You'll get access to the BX Trender, the Smart Money Mastery and Smart Money Zones, and the volume profile. Each course shows you how to actually set up the indicators, the proprietary settings. Over 20,000 students have implemented this into their trading system and are seeing consistent profits from as low as $10,000 all the way up to over $3 million. The link will be in the description.